Welcome everyone to the joint video Q&A session with GSC Solicitors and Strettons. I'm Carol Joseph, a partner in the property team at GSC Solicitors. With me to discuss the topic of tenants, can't pay, won't pay, and the options for landlords with tenanted properties in the current climate, I have Simon Tilsiter, Managing Director of Strettons, Mark Bolton, Director of Commercial and Investment Agency at Strettons, Peter Belcher, Partner in our Property and Property Finance team, and Richard Curtin, Partner in our Insolvency and Restructuring team. Richard, if I could turn to you first with the question, what practical steps should I be taking as landlord and on the other side as tenant?
Hello, there's a little bit of an irony in the response to that because the answer is the same for both. Both, whether you're a landlord or a tenant, you should be in dialogue with your opposite number, be it a landlord or a tenant. The government is encouraging a consensual restructuring culture to be far more consensual, to work together and so forth. You'll all be aware of the measures in place at the moment to prevent forfeiture and also winding up petitions. Those will be unlocked and the landlords will get those tools back, but it's not going to be quickly and it's going to be gradually. And the courts have handed down 2 decisions in the last week inhibiting petitioning creditors as landlords from proceeding with petitions. So the old adage still applies. Be in dialogue, approach your opposite number, find out what the problems are, work together, be reasonable, be seen to be reasonable, because if you try and litigate prematurely, the court will hit you with an adverse costs order and a considerable amount of embarrassment. So the important thing is keep in dialogue and also take advice throughout. The Corporate Governance and Insolvency Bill was presented to the House of Commons on the 20th of May, and it's now in the House of Lords. It's going to be enacted and get the royal assent fairly quickly, to my mind. And I also think it's going to be pretty much unscathed. So it's going to go through rather as is. But take professional advice as to what is coming in. We don't know what the regime is going to be post 30th June. I think that landlords are still going to be inhibited from recovery processes. But keep talking to people that owe you money or you owe money and keep taking professional advice. These are very rapidly changing times and you have to adapt and overcome accordingly.
Thank you, Richard. Now turning to Peter, what's next post-lockdown? What are the attitudes of landlords and what are the attitudes of tenants?
Thank you, Carol. Just one word, I think, just to follow up from what Richard said about the government's code of practice, which is encouraging everybody to act reasonably and be in dialogue. My own feel is that this is possibly less effective than people imagine, because once you get down to pounds, shillings and pence, those arguments tend to overcome those of being reasonable, etc., especially when potentially livelihoods and or businesses are at stake. So one word of caveat on that. I suppose the landlord's attitudes to a certain extent reflect one or two things. They may have their own problems in terms of banking covenants and dealing with their bank interest, capital repayments, etc. If they don't have sympathetic banks, then they may be in a position where they're effectively forced to take a rather harder hand in this situation. So they don't always have a free hand to act as they would wish to do so. The second point, I think, for landlords to consider, is the tenant really struggling or does it really have a problem? I think there are tenants out there who are potentially utilising the lack of ability to enforce as an excuse for not paying rent. There are not many of those, but there are 1 or 2 of those around. And I think if you're a landlord and you believe that your tenant is basically utilising the COVID as a cover-up for not paying rent, then I think you're going to take a different view from somebody who's genuinely struggling. And then from that point on, I suppose, what landlords will take is that they will have to assess the market, which is very, very important. Are they prepared to risk a void by utilising winding up proceedings and or utilising CRA, or are they effectively forfeiting the lease? Are there any other ability to let in the market? What is the market saying, which we may hear a little bit more about in the future? Do you need the cash flow? Do you want to help? Most of the questions will have answered yes, but there is a balance to be made. I think as a landlord, you should be looking to give some concessions, but not take the whole of the pain. In terms of a tenant's attitude, I think there's a couple of things just to mention. One, a tenant might ask itself, is it worth it? Do I need to keep trading? Is this a hole that I can't get out of? Because mere rent deferment still leaves a hole in the balance sheet or something that's have to be filled. And especially in the hospitality sector, it's not as if you were making widgets, you can make more widgets. There may be a pent-up demand. There's only so many hotel rooms you can rent. So you've lost income over the last 3 months or so, which will never come back. I think in those circumstances, if you want to continue to trade, you need, as Richard said, dialogue with your landlord and try and persuade him by utilising all the tools at your advantage, i.e. cash forecasts, etc., to show that you are struggling, in order that he can make a relevant and sort of balanced view of your position. If you can't, then I think we may see more CVAs coming in. We've already got Travelodge and Restaurant Group pushing CVAs in order to protect themselves. I think the same advice goes to both. Try and find a middle ground. Try and find a way of working through it. Understand each other's problems. Landlords have problems as much as tenants, and may have obligations that tenants don't readily see. So I would reiterate what Richard said, is that it's dialogue.
Thank you very much, Peter. And Simon, what credit control methods are available for landlords during lockdown and post-lockdown?
Well, I think I perhaps have got the easiest question to answer, because not much is the answer. Echoing what Peter and Richard have said, the moratorium on landlord action brought in by the government has meant that you can't use a bailiff to distrain, you can't forfeit a lease, and you can't issue a statutory demand to wind up a tenant. Now, you might not necessarily want to do any of those anyway, and like Richard said at the beginning, dialogue is key. It always has been key. If you're talking to people, then you can usually find a way through it. The problem comes when there is no framework within which to discuss things, because if there's no consequence from not paying, then tenants who wish to, if you like, use this as a cover up, as Peter said, will do so. And next week is the end of the 90-day moratorium. As Richard said, that might and probably will be extended, but at the moment, the 90 days are up some point mid next week, so you will be able to bailiff and forfeit next week. So you want to be nimble and agile as a tenant or a landlord in what you're doing, and if you're talking to people, you can usually find a way through. Just picking up on something that Richard said, I'm expecting as well this paper to come out to allow landlords or insist on landlords and tenants talking reasonably to each other. I read the Australian version last week, and it didn't make happy reading for landlords. And I do think that there's going to be a lot of disputes as to the way that should be interpreted. It is quite tenant friendly at the moment, so we need to watch that space. The other thing I would say is to try and put some, I suppose, practical examples to what's happening out there. Let's talk about a tenant who won't pay rather than can't pay. I've got a tenant in Chinatown. They're a well-known bookmakers. I know they've got the cash on the balance sheet because you can see it. They're telling me they won't pay. I'm waiting for the moratorium to be lifted because I know it's one of their best trading units in the country. They're not going to lose this unit, but that's fighting talk from a bold and an aggressive landlord. But what happens if that tenant wasn't so strong? Could I re-let that unit? Would I get a better rent? Well, on that particular unit, I haven't had a rent review for 4 years. So even if the market rebases and the the income was to drop by 30% or the market rent should drop by 30%, I'd still be getting more rent for that unit if I were to relet it. And I'm pretty sure I can relet that unit if it were vacant. So I think the key for landlords is, as ever, know your market, know what you should, have a plan B. You should always have a plan B. And if this particular tenant goes, then we have a plan B. Let me perhaps use another example. We've got a property that we manage in South London, and it's one of those shops on a street that's never ending, shop after shop after shop, and it really shouldn't be retail anymore. And retail there is going to be challenged. We're getting £16,000 a year for this shop and upper part. Now, I think if I had possession, I could make a small kiosk at the front and get £8 grand a year for that. I think I could convert the back of that shop and the garden into 2 more flats and upstairs into 3 flats. And I think I can get the income from 16 to something closer to 70, 75 for a relatively modest amount of investment. The point of mentioning this is you should always be thinking about, as a landlord, what do I want from my investment? What alternative use could there be? How could I change things if I have to? Now, if this tenant continues to pay £16,000, the client is going to be relatively happy. So heads he wins, the tenant pays, tails he wins, the tenant doesn't pay and goes, and we can redevelop. Now, not every property is as fortunate as that, but one should always think about what is your plan B? And I'll stop talking now.
Thank you very much, Simon. And Mark, that's probably to sum up really, what are the trends you're seeing in commercial property and what demand is out there? Hopefully there is some.
Well, it's an interesting and evolving, still evolving market is how I would phrase it at the moment. We're obviously a few weeks out of lockdown and we're seeing changes develop week by week. From the office leasing side of things, which is probably accounts for about 70% of the work that my team does, we're based in the city fringe of London. The office inquiries are obviously markedly down from where they were, which is a shame because we had a flying start in January and February. And I think if there's one overwhelming shift that we've seen is a change in the proportion of inquiries we're getting for city fringe offices relative to, should I say, suburban London office locations. So traditionally, pre-lockdown, we were probably looking at maybe 70 to 80% of our office inquiries and leads being within the city fringe market, city fringe. Now we'd say it's probably 50-50 between city fringe and outer east and north London, which is the geography that we cover. So locations like Islington, Hackney, Holloway, those sorts of areas where, you know, I suppose it's an obvious trend in that businesses are looking to see whether they can make savings on their overheads. Clearly, you can get an equivalent office space in somewhere like Hackney Wick at half the price you would pay in Shoreditch. There are obviously considerations and concerns that businesses have about staff having reliance on public transport. And dare I say, you know, for some of the smaller footloose businesses, you know, they're happy to relocate to locations allowing for them and their staff to walk to work or cycle to work. And I think there is going to be an overwhelming trend away from having obviously face-to-face meetings for the next 6-12 months. And so the need to be based in central London is probably far less prevalent than it has been for a while. That's not to say that there aren't city fringe inquiries, there are, but they're tending to be at the smaller end of the market. On the retail side of things, I think we have actually been quite surprised how active the retail inquiries have been. But again, there's been a fundamental shift. The multiple retailers that we've done a lot of work with over the years have largely shut up shop for the time being. I think there are 1 or 2 that are starting to creep back into the marketplace because obviously if you're looking at needing planning permission and shop fit and so on and so forth, you're probably looking at maybe 4, 6, 8 month lead in. But overwhelmingly, the inquiries that we've been getting are from independent shopkeepers looking for urban village locations in London. So again, refer back to those locations, you know, London Fields, Islington, areas where I think the local residential population have been again, reluctant to travel. They're not going into central London to go shopping. They're using their local high street again. And so I think there's been a lot of very interesting kind of feedback we're getting from occupiers in terms of actually bounces in some businesses that have been able to be open during lockdown, and that's kind of feeding the demand in those markets. And I think finally, industrial we're dealing with, that is an interesting sector. It's actually busier than it has ever been. Again, probably not surprisingly, both in terms of acquisition requirements and disposals. And from the investment side of things, as Simon, as we were talking about earlier, we've been very busy during lockdown with inquiries for disposals, and particularly inquiries from buyers, high net worth individuals, small, nimble property company buyers that are in the market to buy and look at opportunities in this market. Now, the inquiries are at lower levels than we're used to again, but the market is still there. And as I say, we've had 2 auctions during lockdown, and the last auction we had in May, we had a 92% success rate. We raised £14 million, and we had a reserve figure. We were selling properties at 35% over reserve. So the market is there, and we also think that there is likely to be some distress in the market coming. We've talked about the moratorium on being able to take action against tenants, and I suspect that come September quarter day, if not before, I think there are going to be some issues brewing in terms of landlords not having met their loan obligations, loans of value, considerations coming into play, and obviously levels of tenant failures. And so we think actually there's quite an interesting window at the moment while stock levels are low and buyer interest is still there to look at selling property now, whereas we think in September there could be quite a rise in the number of opportunities coming to the market, and perhaps some adjustments coming in terms of pricing as we see the market unfold over the next few months.
Well, thank you all for your contributions, and also we can see it's going to be a challenging time for all of us, but hopefully there are opportunities as well. Thank you all for your time today.